This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. K-State grain economist Dan O'Brien starts today's show with a grain market update. He explains how the recent USDA WASDE report and other reports impacted the market. Dan discusses corn and grain sorghum in the first segment. Dan continues the show in a second segment as he talks about soybeans, wheat, and canola market changes. Ending the show is Chip Redmond, K-State meteorologist, with his weather forecast. He says when Kansans can potentially expect to see the snow melted and how temperatures are across the state. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show talking about the grain market with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, we recently had the WASDE and other USDA reports come out, and wanting to talk through the different commodities and how those reports impacted what we're seeing for them in the market, and starting off with corn.
Well, the markets responded positively to that report. They came out on Friday's closing and reports. The USDA, again, annual crop production report, the World Ag Supply Demand Estimates report, the WASDE report, and the grain stocks report all came out, and some others for other commodities. And by the time all that hit, corn closed up on that Friday up at to 470.5. And as often happens, and research has shown this, that in the first 1 or 2 days after a report, you get most of the response. And we've been kind of true to form on that. Again, the market pays attention to that on day one, and then afterwards starts looking around to say, oh, we've absorbed all that, and now where do we go? So anyway, that's kind of what happened. And for corn, you saw the upfront March contract closed up on that Friday, again, Friday, January the 10th, up to 470.5, up 14.5 cents. It's interesting that the new crop DEES contract closed also up about 3 and 4 cents, up to 450.25. So if in doubt and the corn market doesn't know what to do, it probably goes to 450. And that's about what happened. And in the broader picture, what occurred in that supply demand balance sheet was that a little bit of change in planted acres, small decrease. Harvested acres actually decreased about 0.2% change, not a lot. The big issue came with a change in yield, a drop of 3.8 bushels an acre, almost 4 bushels an acre, down to 179.3. It had been an estimate of 183.1. So that in itself is a bit of a head scratcher. I think the USDA will have to internally have discussions as to how that error occurred, because that's an unexpected error. It was outside the pre-report estimates of yield. The low end of pre-report estimates coming into that report was 181.3. So this came in 179.3, 2 bushels below that. So got some thinking to do with regard to that. And I'm not critical of them, but that's a big change. So by the time that occurred, then the production number dropped from 15.14 billion bushels down to 14.86 or 87 billion, a drop of 276 million bushels. You brought that through the rest of the supply-demand balance sheet with a little bit of a decrease in feed usage and a decrease of about 50 million bushels lower feed residual usage, 25 million bushels lower exports, total usage down 75 million, but you add that to the drop in supplies, and ending stocks ended up projected at 1.54 billion bushels stocks to use, and that was down about just under 200 million bushels. And the stocks to use now, instead of being 11.5% stocks to use estimated for the 24-25 marketing year ending August 31st, now you're down to 10.2%. So sizable change. The USDA did, in the midst of that, make a change to the higher side, a modest change, I'd say, given all of the tightness calibrations that they have, added about 15 cents to the corn price, $4.10 up to $4.25. I've come in and in other analysis looked at what the price is that the futures are now projecting. They're that $4.25 plus about 10 to 12 cents, about $4.35, $4.37 thereabouts. So with all of that, you have a kind of a change in what had occurred. The grain stocks to use report was a key element of what led to some of these changes. You did see overall usage, September, November 24 disappearance of 4.56 billion, a little bit higher than had occurred, just a small amount higher than had been occurred from the same period last year. But really the issue comes down to expectations. What were they expecting? And obviously the market wasn't expecting that type of change. So when you dig into the numbers, you look at Kansas corn. So it's always interesting to see, yes, I know what the national numbers are. What happened in our backyard? So by the time this last final end-of-year report came about, we ended up with a projection of 6.3 million acres of corn planted in Kansas, and a final area harvested about 5.8. Okay, so understand that, and that'd be the highest in 2022 was 4.44 million acres, 5.15 in 23, and here we're at 5.8 million harvested this year. So that's moving to the high side, and you did see Kansas corn yields adjusted. We saw 115 bushel an acre yields in 2022, and some of those years affected by a lot of droughts, particularly in the West. 119 bushels an acre in 2023, and this year, final number, 129 bushels per acre. So still for Kansas, moving to the high side, growth in terms of corn yields. And the final number, whereas back in 2022, we had 510.6 million bushels produced, 612.85 in 2023. Here in 2024, a jump up to 748 million bushels and change. So almost 750 million bushels of corn production in the state. And it had to come from somewhere, and somewhere it come from. When we talk about wheat, you'd seen kind of a decrease in Kansas acreage occurring in there. So that's probably where some of those corn acres came from. So interesting to watch. You look at the national yields around the U.S. In the 3 I states, you ended up with 211 in Iowa, 217 in Illinois, 198 in Indiana, 206. Out to the west, we're breaking 200 bushels with in the Northwest. Idaho 206, Oregon 208, 235 in Washington. So some great yields up in those parts of the country. Even Arizona 225. I imagine most of that's irrigated. So quite a bit going on there. With grain sorghum, you also saw some minor changes in the supply demand balance sheet, in that the NASS raised the grain sorghum national estimate for yields up to 61.3 bushels per acre, a 23 million bushel increase in production nationally, up to 344. And by the time you go through the rest of the balance sheet, you saw feed residual use up about 5, food seed industrial usage up about 20. So if exports didn't change, and if we don't export sorghum and we're not making much change for feed usage, that's going into food seed industrial usage, i.e. ethanol. So we had that occurring. Would say just quickly then for sorghum in Kansas, we had seen the We've seen the Kansas sorghum acreage over the last 3 years go from 3.3 million in 22, 3.6 in 23, estimated at 3 million planted, so down a little bit in 24. Harvested acres up 2.8 million. The Kansas yield it's been a trend upwards. 39 bushels in 22, 52 bushels an acre in 23. This year, 65. So it's pretty strong, and up to 182 million bushels produced in the state in 24 compared to 169 in 23 and 105 in 22. So pretty good year great year production-wise for feed grains. And with this news in the national corn market, some little bit better prospects for prices for both those crops heading off into 2025.
Dan, really any surprises or concerns then when we look at the USDA WASDE report or other USDA reports?
Maintaining strong usage in ethanol production, and actually some increase on the sorghum side. I would say we'd seen before the corn harvest started that there were official sorghum bids at Kansas ethanol plants, the only place in the nation. So I guess that was a harbinger of this sorghum change that we'd seen there. And other than that, the decline in ending stocks for corn, anticipated ending stocks down to 1.54 billion, now raises the stakes for any weather risk that would come in and present itself in spring, summer 2024. So to me, it's always amazing that the fine-tuned view that we have of what's risky or not. I don't know if you can see we're much more risky at 1.54 billion bushels ending stocks as we were at 1.7, but it has the market's attention. And has given us some boost in prices, and I think probably makes for a more volatile upside situation heading off into spring planting than we had before.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because when we come back from that break, we'll once again be joined by Dan O'Brien as he continues his conversation. You're tuned back into Agriculture Today, and we continue our grain market conversation with K-State grain economist Dan O'Brien. Dan, we talked about corn and grain sorghum in the previous segment, and continuing our conversation now with soybeans.
On day one of that report, we saw soybeans go up 21 cents and had a strong second day as well, as I recall, on Monday. So on the day of the report, pretty good support, and then it had also gone up on day two, on the second trading day. And we'd seen some decline in planted acres and 0.1%, not huge amounts, and 0.3% decline in the harvested acre number. We saw the U.S. yield go from 51.7, estimated now 1 bushel an acre lower at 50.7. So by the time you get into this math, this algebra, we had seen the overall size of the U.S. crop for 2024, the USDA's official estimate, drop about 95 million bushels from 4.461 billion down to 4.366. And total supplies down about 89, a few more imports coming in to this country, probably from Canada. Everything else holding pretty steady in terms of usage. So the ending stocks went from 470 million, estimated in the December report, and 10.8% stocks to use, down to 380 million bushels and 8.74% stocks to use. So over 2% drop in stocks to use. So I guess in the soybean supply-demand balance sheet world, not that much of a change, about 90 million bushels. Again, we had 200 million change in corn, but 90 million bushels drops the ending stocks use from over 10 down to under 9, with the potential for increased usage, et cetera, to drive that even lower. The USDA did not make any changes in their price, still projected $10.20 per bushel for the U.S. cash price, but I would still say there's a fair amount of time to go in terms of seeing what happens in the spring. What this has done is to set up all that much more concerns about corn versus soybean acres here in the spring of 2025. So I guess if you just based on what you'd have here, we've swung a little bit more towards corn for acres. We're still probably leaning overall for soybeans, but at least we've gotten more closer to neutral and a little bit more positive. Buried within that soybean complex, you see that soybean oil export number jump amazingly, precipitously high. We don't normally use the word precipitous with drops. This is a strong jump higher from 1.1 billion pounds up to 1.6. So that's about a third jump. And you were seeing that in the weekly soybean oil export movement figures. You saw the amount of crush, domestic disappearance for soybean meal, crush of soybeans, that's actually unchanged, but domestic disappearance actually moved up about 200,000 short tons. So some of what's happening on the soybean side is coming from underneath, from the co-products. And so that's interesting for me to watch anyway. So overall for beans, we had seen more of a positive tenor. The one thing on soybeans is that when I look at the impact on biofuels, the USDA did come back and scale back the usage of soybean oil for biofuel use. So you got that going on. And I think, in essence, you're kind of seeing a trade-off between stronger exports of soybean oil offsetting some of the domestic use of biofuel. And, we like to look at what happens in Kansas. Kansas yields the last 3 years, 27.5 and 22, 26 and 23 jumped to 35 this year. Total bushels of soybeans produced in Kansas, 154.7, and that compares to 103, 104 last year and 132 years ago. So strong production years for both corn and soybeans in the state of Kansas in this last year. Interesting to watch.
Dan, what are we seeing for wheat?
The wheat supply-demand balance sheet did not change that much. One thing I forgot to say, to throw back on soybeans as we leave that, the amount of usage in that last quarter, the September-November quarter for beans jumped 13%. And for wheat, actually, we had a 22% jump in wheat usage during September-November, but we're just more overwhelmed with supplies that it hasn't had as much of a positive impact on the balance sheet. In essence, you had no change in production for wheat. Of course, if that was going to happen, that would happen last September in their small grain summary report. So nothing there. A little bit of change in imports, just basic ending stocks just about the same, just about a 3 million bushel differential, a little bit higher. Stocks to use still basically 3.9, just under 40% stocks to use. And in fact, for hard red winter wheat, we did see amongst all those classes, saw about a 10 million bushel decline in the projections of hard red winter wheat exports. And when I go back and look at what's happened in Kansas, we talked about these acreage increases for these other crops. You see the amount of wheat planted in Kansas, hard red winter wheat, up and down. But 2022, we had 7.3 million acres planted, 8.1 in 23, back down to 7.6 million in 24. In the amount of production, this last year, 307.5 million bushels, up from 201 million in 23, 244 million in 22. So what's afoot is that we just have more than adequate supplies at this time, and exports finding strong competition from these international factors you and I have been talking about for a long time, you and I and Guy Allen. So just not moving a lot of wheat out at this point to offset what's going on otherwise in the markets. There's hope for wheat. I would say, in looking at the international stocks to use numbers, and got that figured, you still see world stocks to use, ending stocks to use for wheat dropping from 2 years ago, 21.1% stocks to use world minus China, 20.6 stocks to use 23-24 this year. After this last report, 19.3%, hasn't been that low since at least 2015-16. So still a market sitting on the precipice, some type of change probably going to happen when one of the front and center cash sales push out the door sellers, i.e. Ukraine and Russia, when they're caught short someday, then the market will react. But at this time, we're just not seeing the movement export-wise out of the U.S.
And something notable from these reports that you wanted to point out involved canola.
Canola in the U.S., an increase in canola plantings up to 2.751 million acres from 2.34 and 2.26 in 23 and 22. In Kansas, we'd seen canola acres, area planted, jump to 8.5. Well, in 2022, it was 8.5 million acres, dropped to 1.523, back up to 8.5 in 24. The harvested acres, 8 million, it's highest in Kansas that we'd seen in the last 2 or 3 years. And that matches with the increase in U.S. numbers. Seen yield per acre at 1,200 pounds per acre, 600, 690 in the last 2 years. So pretty good year for canola. And production, 9.6 million pounds of canola production in the state, up at least double from 22, and 23 was just a tough year. And 4.8 billion pounds in the U.S. in 24, and up appreciably from last 2 years. So, we've established some plants here in the state of Kansas for crushing canola, and I think it's had an impact on Kansas farmers in that they now know they have a place to take it, and that's always helpful surety for making planting decisions.
And as we're thinking about Kansas farmers, wanted to bring up, we've felt both a lot of pessimism when we think about the grain market and potentially farmers thinking about, should I even plant this crop?
I would say that the general rule of thinking is that if you can plant a crop, cover your cash costs, make some money over that, you'll at least have something to contribute to cover your fixed costs. If you plant nothing, you still have those fixed costs and just have to figure out where you'll come up with money elsewhere to actually cover it. But if you can cover your seed, your fertilizer, your out-of-pocket cash costs, which at these prices, we're doing pretty well at doing that. It's just full economic costs that we're not always covering. We at least can cover a third, half, 2/3, and if the markets really go positively, all of and more of the fixed cost side. So I would encourage people to, even though there's a discouragement at times of not covering full economic costs, again, land, machinery, and the direct costs, and family living, that still makes economic sense. As we're sitting here right now, we've turned the corner. We're in January. We're making planning decisions now and for the next 2 or 3 months. It still makes sense economically to plant something that you can cover the out-of-pocket cash costs with and have something to pay all those fixed costs with. So that would be my approach. And overall, there are a lot of factors in this world, ag marketing world, that can look a lot different in March, April, May than they do in January. So I wouldn't give in to the prevailing pessimism yet of where markets are going to go. I just think there's a lot of weather uncertainty, issues that we can view in an asymmetric manner, all negatively, trade discussions and whatever, that have to play themselves out. And they tend quite often to mitigate themselves, the problems do, by the time we actually arrive at workable solutions down the road. So that'd be my response to that, Shelby.
Dan, I appreciate you taking the time to join us today.
Thank you, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be right back. You're tuned in to Agriculture Today, and we end our Friday show with a weather forecast from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, we've reached what is climatologically the coldest day of the year.
Yep. I'd say the coldest couple of days just because it varies by location and how long climatology is in some places. But yeah, we are there. We're in the stretch of the coldest time of the year on average. And the good news is when we look at the following days and weeks and months, the average just goes up from here. And we'll go all the way up until July. And so that's a positive thing. I know a lot of folks are kind of down in the dumps. It's been cold. The snow's been sticking around, but there's some positive to start the day off.
Are we going to continue to see snow on the ground for a while?
Yes, we've had snow on the ground for about 12 days now. It depends on your location, obviously, snow depth, but it's not that long when we look at history. We've had it several years. 1979 is a year that sticks out. So is 1960 as 2 years that had snow on the ground for 40 plus days at 5 inches or more. So we're not anywhere near that yet, but it's been on the ground for a while and has actually influenced the temperatures a lot too. We're keeping the air colder above that snowpack. And as a result, we look at the map and the mesonet every afternoon. We're looking out in far western Kansas, and they're in the 40s, even some 50s. And in central eastern Kansas, we can barely get into the 30s because of that snowpack. So it's had a big influence and a long-lasting influence that when we look back at this winter, is going to be really tailored to the snow cover that we had for the extended period of time. My guess is right now we carry that snowpack likely into February.
Are we going to continue to see cold air then as we move forward? Yeah,
so we had a brief warm-up both Thursday and now Friday, but cold front is coming. We got much colder air coming in from the north. It's a touch of Arctic air, mainly over the Canadian provinces, and that air is going to funnel southward and bring a much colder weekend. It'll be cold for the football game on Saturday, and it would be windy as well. And those colder temperatures will stick with us through early next week. There's been a lot of hype around the cold. It's about the same cold as what we saw after the blizzard. So we're going to get lows around 0 to slightly negative, with highs in the teens. And with wind chills, some days we'll get pretty low in the negatives. But overall, not record cold. Our records, it's the coldest time of the year. So our records are really low, in the middle teens most days. And that takes really true cold Arctic air from the polar vortex to get that far south. And we're just not seeing that contribution over the next several days. Looking out even further into next week, temperatures do start to moderate by the end of next week. There is some potential midweek and then again at the end of the week or into the weekend where we might see some chances of snow, but confidence right now is pretty low because that cold air as a result of the snowpack is helping the storm pattern overall go further south in the models. And so we're not really having good consistency in the models in the medium range. In fact, looking into February, the new outlooks just came out for February, and Kansas, for the most part, is in equal chances for both temperature and precipitation for above, below, or near normal. A lot of uncertainty going into February. Right now, we're definitely going to start February on a cooler note. Then I think by the end of February, we're going to warm things up. And there's some potential maybe the first week or two for some active weather. But overall, I'm going to guess February ends up dry.
When you say active weather, what do you mean?
Active weather means that storm pattern is going to potentially shift northward through February. And if it does stall out somewhat over central United States, we could get another storm system or two that brings some heavy snow or rain through the region and potentially maybe multiple storms depending on how those storms string up. Right now, we got to break the pattern down. We've had that ridge of high pressure across the west. That's been the result of those fires in California. We got to shift that further west before we can have that true breakdown in the pattern.
Chip, I appreciate you taking the time to join us today and give us our weather update.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. As always, you can check out the weather on the Mesonet, which you can find by going to mesonet.ksu.edu. That's all we have for you today on Agriculture Today, but we'll be back with more for you on Monday.